Yeah, okay,
100%
good.
going to lead it. Yes,
Okay, good.
gosh. I love leading. We all know that.
You love talking too. That's a
Yeah, exactly. So, team, as you might be able to tell, Dan and I have met each other before. Actually, in the beer garden of a pub where lots of good conversations start, really. But I was really excited to, Dan, have you on Brunch with Friends. So there's people online who have come to a few of these, who are part of some of what we're trying to do with the connection table. Joe Palmer's not here today, so I am in charge, which is always dangerous. But what we really are focused on doing is how do we build really strong connections across this regional city divide, but equally, because we don't believe that any division serves us, that we're better all together, that decisions are better when we're all part of making decisions, regardless of where we're based across Australia, and that actually the sectors sometimes can also make it more confusing than it needs to be. Rural, regional and remote Australia is more than agriculture and mining, as we all know. And at the same time, sometimes it's really handy to have people in our network who might not be based in a region, but can certainly help with the work that we're wanting to do. Enter my friend Daniel Gavel. So Dan, this is a recorded conversation, but it's a chance for us to have a really informal chat. And we're always looking for people who can add value to the networks in the regions, which is a no-brainer why you would be part of these Brunch with Friends. So I'm keen to start, if you might. I've already said that we actually met in Gundawindi team based on some work that Dan was doing in that neck of the woods. But I might throw to you, Dan, to do just an introduction, who you are, where you live now, and then let's dig into some of the work, how you got to the work that you're doing. And I'll declare from the outset, I am an investor in the flock, and that this is not to encourage more investors, but also, that might be why some people are on the call. But let's start with who you are and how you've ended up here.
The long story short is I'm Dan Gavel, director of Flagship Capital, which is family office that runs around as a early stage technology investor. I grew up regional. I always laugh when I get asked how do you learn to get comfortable with risk? And for me, it was, growing up out the back of Dubbo in a little town called Warren, picking up snakes, jumping over fires, swimming in dams you probably shouldn't have been swimming in. And I think from the way my parents brought me up out back, I got very comfortable with risk very, very early, which is good and bad in a way, I guess. What led me to venture, I guess, is I came from a background of, financial planning, high net wealth advisory. Was fortunate enough to meet my business partner, Paul, and we set up a family office together, which, like a lot of people in the venture industry, slipped, tripped and fell into the ecosystem. Fortunately enough, when it was quite early. Over the 10, 11 years since then, we sort of refined our model, changed it, gone with the flow to get to where we are today.
You talked about your financial planning background. What took you from doing that? Why that into investment? Most people are happy to...
Yeah, sure. I guess it initially started because when I met Paul, my business partner, I just started my own firm. And within the financial planning world, there's a very tight construct of approved product, as they call it, of things you can do, a world you can operate in. And if you get outside that, it gets very murky and risky legally very quickly. So with Paul, we found he was wanting to do things that wasn't sitting in the financial planning world. He became, the sort of the 90-10, 80-20 rule of income, where he was just sort of my biggest client by so far. It made sense just to get out of that world, go into our own world where the advice wasn't needed because we had our own companies, directors. So you got to skip that sort of thing. And to get into the VC side, we were actually introduced to a deal by our property lawyer for a company one of his firms looked with, and invested in that, and the rest has sort of grown from there. It's very different I guess, to the financial planning world, because when I was a financial planner, I actually didn't give a whole lot of investment advice. I really focused on the strategic side because I came up in financial planning in a firm that was heavily indexed to investment advice. And when the GFC happened, they pretty much lost all their clients because they had been so indexed to it. When the market turned, it reflected very badly on the way they'd structured their clients. So they had clients losing a lot of money from overly risky and potentially unnecessary strategies. Like if anyone knows margin lending and stuff like that, there were, a lot of that in there, which made me feel uncomfortable. And it was horrendous because I had to be making calls to people close to retirement, people whose whole saving was in these strategies, telling them they'd lost 20, 30, 40, 50% of all the money they'd saved over the last 10 years.
So I have been on a fast learning curve in the venture capital investment, tech investment, growth, all of the rest of it. And maybe some of the others on the call or those who might listen to it are in a similar position. Is there a bit of a, is there an overview you can give us of where you fit into, before we get into why tech and why you invest in that space, but a little bit of a one-on-one of that investment landscape? And then any kind of where you go for information. So podcasts, books, who are some of the people that you reckon for some of us on this call we could listen to or read to get more experience or understanding in this space?
Yeah. So it's key, I guess, first to be upfront is we deal mostly with wholesale, or not mostly, all with wholesale investors, which unfortunately is in some degrees limiting. But on the scale of the life cycle of a tech company, from zero, which is a napkin with half-baked idea, through to like exit, whether that be IPO, trade sale, we're at the napkin end. So like the founders have a good idea, they've got some sort of subject matter expertise, they've got a little bit of technology and a whole lot of dreams and potential behind that. We invest at that end. It's like, not arguably, it is the most risky end of that, but we were sort of over time got directed to there through things like our check size makes more sense to there. The way my head works, my background works much better at that stage than the later stages. So, the growth and everything stages you're talking about sort of goes pre-seed where we invest, you get a little bit of revenues, get some clients, you raise money, that's seed. And then the next round is sort of, who your clients are, you can put money in it, it becomes a growth function. So every dollar in should equal a more known dollar out. So if you put a dollar in, you should know if you're going to get $1.50 out the later stages you go. And who do I listen to? It's different all the time. I guess like the things that get me really curious and they're not so tech orientated, but help you understand the investment world is a podcast called Acquired. So Acquired is a really great one. So they're two venture capitalists who now go and break down the stories of some of the biggest companies in the world. So one of the ones that got a lot of notoriety was like, I don't know, the Nike story. So like that one was really well received. That's really good. There's one called, it's probably more operational, but it's called SaaStr. So SASSTR. SaaS is a pricing model in venture and technology. SaaStr is the global conference for that. And a lot of the operators who speak at the conference record their videos. So you get a lot of tips on how the really great end of the market are operating. TR, not TA. And then the other good one, and the guy who runs this can be a bit grating at times, but This Week in Startups by a guy called Jason Calacanis. Again, it just gives you a broad base coverage of the market. And then reading wise, I just focus on when I've got a startup I'm looking at, I just go deep into whatever.
There's a question in the chat, and team, we're a small group. Feel free to unmute if you've got a question. But Natalie, I'm going to read your question out for you. So one of the questions that Nat asked was, how do you ask startup to demonstrate their potential at napkin stage?
Yeah, I got a great example of this. So I don't know if you many have heard of it, but there's a renewable energy company called Amber Electric. Um, so they basically they're the first retail energy provider in Australia who provides access to the wholesale energy market while optimizing your battery and solar operation. So it does it all without you having to touch in. I did that investment off napkin. And in that case, the things that factored into it, and this is the very narrow story, is the introduction came from a VC who I have a lot of respect for, who said, these are the smartest people I've ever met. I used to be their boss at BCG. They'd been in the renewable energy team at BCG. One founder had gone on to work at Tesla, rolling out their virtual power plant in South Australia. The other one had been in the Middle East running a very big startup over there. And they'd come back and spend a lot of time iterating on a renewable energy concept, which started to form up. And they had the one thing which mattered in that business model, which was like a agreement to have a retail energy license through a bigger provider. So they had the potential to do a business model. They had the backing that their personality had potential from someone I respected, and then they had the subject matter expertise from having been in renewable energy for some time. And then it was just a bunch of conversations to get comfortable that they knew what needed to be executed to grow. And that one's topical because in the news yesterday, it showed that there was just announced they raised another 50 million. So we've seen them from the very first check of 150,000 to just raising 50 million.
So
Awesome.
Dan, oh, sorry, Natalie, did you?
Oh, all good. I was just saying thanks.
Yeah. Did you, Dan, can you talk about why you focused in on tech? I've just had a week with Steve Baxter and we've talked nothing but defense and killing things. Talk to me about why tech is your thing.
It sounds so immodest saying it, but I guess at the pre-seed stage, it's a very first principle driven industry. Like my mind works that way, where one of my strengths is I can talk about concepts I don't understand, think about understand them very quickly, and then project out to what I think they'll look like in 5 to 7 years. And I love the challenge of that. And because my brain works that way, it makes me want to go deep into it, as opposed to investing in stocks where everyone's going to should have the same opinion because they're all looking at the same things. There's no confirmation bias. There's no history that goes into it. It's like BHP is either good or it sucks, right? It's a bit more binary. And unlike a lot of other types of investing, the venture world, particularly at the pre-seed stage, is very, very, very hands-on. And I do love the impact you have. You talk about how it connects to the regions. We've been out to Gundawindi and helped people set up solar and battery on their homes. We've helped many people from one of our other investments fund tractors and things onto the farms to be able to manage one guy only just got a tractor in time for his contracting business to do the harvest one year. So seeing it apply is actually really a good thing. And then just more and more I became curious. And I guess for me, I've got two young kids, a 3-year-old and a 1-year-old. I like being really close to the coalface because I get a sense of how much it's going to affect their life in the future. And I try and build that. It was pretty funny the other day. I was trying to teach my 3-year-old about generative AI through the lens of a startup that I was looking at. And I don't know if anyone's ever played around with ChatGPT and Sora and those sorts of models, but it was really interesting because we were looking at a startup. The long story short is it takes your shitty prompt, your lazy prompt, and turns it into a properly engineered prompt that's going to get a better outcome. So I was helping him make AI generated videos in Sora going, look at this kangaroo with an umbrella that's getting chased by a rabbit in a monster truck. If we do it, look at if you orchestrate the prompt and do it properly, how much better the video becomes. So I find that side of it, like the consumer side, really cool as well, because he really bought into the much better version of that, like the orchestrated version than the other.
He'll be more across that than I am. Pip, you've got a question. Do you want to unmute yourself?
Yeah, thank you. Thanks, Daniel. My question is, like, for someone who doesn't know much at all about VC and ag tech, is happy to try and help people adopt it, but I'm not the instigator, that's for sure. So if we know someone with the napkin, how does the person with the napkin find out that Daniel Gavel, for example, Gavel, is the place to talk to, person to talk to? How do those connections take place?
Yeah, I mean, much harder from the regions, right? Because you don't have that direct exposure. But honestly, like there's a quick Google search can bring up pretty much every investor in Australia. There's even a database like from one of the VCs, like Airtree, which is like, here's a list of everyone who's invested in startups. The overlay I would say to that, it's actually not a good approach to just broad stroke reach out to every investor, because it's very dependent on what it says on that napkin to be like who you should talk to, right? So like something that's a physical product, we're probably not the best person to talk to because I don't have the background in commercializing that. But something that's sort of scalable digital tech would be where we sort of go. Just doing that sort of research, and I've been on heaps of podcasts where we sort of outlay the things that we're looking for. I'm probably bad in that I know content's like really important, but I've never really been someone that's done a lot of it. So I think in a way I leave a little bit on off the table by not being more open about that side of things. But Google research and then trying to get connected to people like, often at second, third degree of separation, like, Pip, someone who's got it, they know Julia knows most of Australia, right? So, you can find your way there. And part of that from the VCs is like, it's actually quite a good trigger when you see someone who's done the hustle to actually get there, because a warm introduction as opposed to you found Black Sheep's email and you submitted it will always be taken more like better, right? So if like Julia sends me a startup and that same startup goes for someone else, I'll take a meeting from the one Julia introduces every time, but there's a high barrier if they come cold.
And I think that's the thing, Pip, because I think for some of us who might have the napkin, we go to Dan and Dan goes, no, thanks, you're not my person. And it's not us, it's that he just doesn't invest in our napkin, right? So we need to find those connections. And so again, Steve Baxter is a great example. Unless it's a defence thing and it's going to be used in war, he does not want to talk to us. Doesn't mean our idea is terrible, but he's not our jam. And so it's going and helping find the right people. And it is just a network that, the majority of us on this call have not had to tap into before because it hasn't been our thing. I'm looking at Alicia with QFF. QFF started to look at some of that from an ag tech perspective because of some of those programs that they're doing. But it's an unknown network to us. But once we've got a few people in there, they're all as helpful as all of our other networks. Yeah. Dan might say no, but he knows the person that might want to be able to help us, that kind of thing.
And I think it's about it's really shitty in a way, but there's like limited capital and a large number of people looking for that capital. So the barrier keeps going up. And, I love a good cliche, right? Like there's a couple of great ones in like, with an investor, if you ask for money, you'll get advice. If you ask for advice, you'll get money. So like there's angles you can take which are a lot softer, and understanding how the cycle of capital raising works, right? Like don't come when you need the money, come when you want to talk to someone who loves giving advice and going and asking them how you should capital raise, who you should speak to. Can you help me refine my idea, refine my deck? Like, we do a lot of deals that way where we meet the founders, like, while they're still at Canva or insert big company name, and they're just thinking about something, and then we work with them for the next 6 months or so to the point where they become investable. Like, the journey of capital raising rarely starts when you realize you need money.
Dan, can you talk a little to the stuff that Cheryl Mack's working on? One, I know you've invested in that, but I also popped their podcasting as an option in that first check, the work that they're doing. But can you just use that as a little example?
As in what the podcast does, or what Aussie Angels does?
No, what Aussie Angels does.
Yeah, so Aussie Angels, I guess, is a gateway for people new to the ecosystem to get exposure to investing in startups. Because I think there's a lot of critical steps people don't do when they think about how they're investing. And this is like a very short version of it. Things like, if you're new to it, you don't understand things like, so from the stage I invest, you have to be what's called patient money, right? Because day one, 10 years is like sort of where you can see full realization of return. That's a lot of illiquidity to get through that. Thinking about how deep a portfolio you want to build, what sort of sectors. So if anyone's thinking about entering like that world, there's two things. Like, first, if you're a wholesale investor, you can sign up and then just start joining the syndicates. But what Cheryl's done really well is she's built, I guess you call it like an education course, where if you do and complete that, you can get deemed to be a sophisticated investor, and then therefore can invest in these opportunities that the wholesale investors are investing in. And I think the good thing about that is it provides access to opportunities that sometimes are a lot harder to do. And once you get on a platform like what Cheryl does, there's a whole range of different, they call them syndicates. So, investors like myself who bring opportunities they're investing in to give them other people the opportunity to look at those. And then the good thing about that is there's people who are focused on like sustainability, ag, electricity, like hyper, like generic, like myself, where it's just more stage driven. So you can get on there and you can start looking at the different sorts of opportunities you can be involved with, and start to get a sense of where you feel most comfortable. And because there's often not, like, for a VC fund, like a bigger venture capital fund, there's often the biggest barrier is the minimum check size, where in Cheryl's model, it's a bit more democratized in that you can invest smaller initial amounts while you get more comfortable with investing in the space as a whole. But also the best part of it, I think, is like, by signing up to all these different syndicates, you'll get to see their deal flow. You'll get to sit in on phone calls with like founders. You'll get exposure to the people in the ecosystem, so you can learn what's most comfortable for you off the back of that. We went sort of to Julia's point about investing in us. We do a model, most of the syndicates do deal by deal. We do a model where we're like, well, as you're learning, invest in our fund, and we'll invest in a diversified portfolio for you. And then if you feel more comfortable off the back of that, then you can invest in ones of your choice. But we find it's a good way for people to enter the ecosystem, get comfortable before, like, it's not so easy just to do it yourself.
And again, there's some definitions, right? So, what's it called? Sophisticated investor, wholesale investor. So there's some things there.
Yeah, but that's the good thing about Aussie Angels, in that if you don't qualify under the government legislation, Cheryl's created a pathway, an education pathway for you to be qualified, certified.
Other question? Has somebody got a question or anything they want to ask Dan while we've got him? I feel like we should have gone hashtag. All of this is fraud in nature, and nobody's going to. What's the accounting?
This is not financial advice.
That's what I was trying. Thank you, Pip.
this is generic advice and should not be taken as financial advice. Past performance is not an indicator of future performance, and any deals will have a full deal memo presented before we invest.
Thank you. Thank you. Thank you. I've been popping some other bits and
In saying that, some of the because I'm sitting on my phone outside without stuff in front of me, some of the resources that you're talking about, will they be available afterwards, or can they be shared somehow without
I
having
think
to watch the whole recording again? Not that I've.
look, I'm recording it anyway, so my meeting recorder takes and summarizes the meetings anyway. So I'm sure between Julia and myself, we can pull out the list of the like podcasts and of like Aussie Angels and stuff like that for sure.
yeah, absolutely. And I guess, part of my interest, other than I think Dan's a great guy, part of my interest, Dan, in getting you into and having conversations with some of us is one of the challenges I had when I was in the chief entrepreneur role for Queensland was the expectation that there was no wealth in the region. So one thing is to Pitt's point and Natalie's question around there's business ideas, there's startups happening in the region, definitely. The other piece is there's wealth in the regions, and how do we have access and opportunity to invest in different things? So real estate, yes, we all learn about that. We learn about shares, we learn about some other bits and pieces. But this is a world in which we could, at different stages through our work life, be investing in. And I didn't know it existed, and I didn't know enough about it. And so that's the other piece for me, is I have said to the Dans and others of the world, there's wealth in the regions, and you not coming and speaking with us and not having, conversations with us about it, you're potentially missing out on people who could be helping and adding investment. Now, Dan's a different example because some of his early investors are from the Gundawindi region, and as you said, your background's regional as well. But I think for some of us on the call, that's the other piece of it, right? Is how do we have this as an opportunity to help grow our wealth and our family opportunities?
Yeah, and the unfortunate reality is that it takes sort of that random connection that someone runs with at the moment for that to work. Like I was fortunate enough that my mentor for a few years, his family was very big in Gundawindi. I laugh because the river was named after them. I don't think that's actually true, but and I'm sure you guys know, coming from the small communities, that there's trusted advisors in the community between the accountants and the lawyers. Like one of his closest friends and family friends was the big lawyer in or one of, I guess, the big lawyers in Gundawindi. So having that in, and we started with, which is great, like the first time I went to Gundawindi, we did a town hall meeting where everyone came in and sort of listened to us. I think the biggest barrier, I always think, because I've been going to Gundawindi for like probably 8 years now, and I go out once or twice a year. The problem is there's a lot of region, and the way regional networks work, and again, I don't need to coach you guys on this, but it's not like the city where you go in, you pitch, like, at the end of the meeting if you're going to invest or not. It's way more relationship driven, and if you put the time in, there's definitely the payoff. Like our last fund had far more from Gundawindi and the regions than ever before, because Julia helped, some of the other guys sort of who knew people made introductions, and all of a sudden the whole town knows I'm in town and I'm having coffee meetings all the time. But you have to put the effort in. And for me, it was easy with Gundawindi because, to Julie's point about wealth, one of our investors from Gundawindi's like famous lines he always tells me is there's more millionaires on the main street of Gundawindi than there probably is in my suburb of Tenerife in Sydney, in Brisbane, which I think is fundamentally true. And it's a huge opportunity getting missed, I think, and I think, we've always thought about part of it, I think, is understanding which towns are doing really well in the regions. So like I could tell last time I went to Gundawindi, it was doing really well because every shop on the main street was full. There was like bougie coffee shops. There was like everything was sort of, coming forward like that. Cairns has a lot on the tourism side. And I think it's about finding that trusted network in, but then also being prepared to put the time in to do it, and also having a good edge. Like, I think Steve's is an interesting one because you either love it or you hate it, right? Like, and Gundawindi was natural because one of my friends shoots missiles. One of my best friends actually shoots missiles at Gundawindi. So like there is a bit of defense stuff happening out there. But I'm with Julia. I think it's not talked about enough, and there's a big trend we've seen over the last 7 or 8 years, like a big transition of wealth from farming to non-farming assets in the regional towns as people have sort of sold up. There's not the generational takeover of farms sort of happening, and they're trying to find new ways to one of our investors, I'm very sure he just does it because he'd be bored otherwise. He keeps him sort of very interested because he's constantly trying to understand the new technology. So there's a part of education, there's a part of he sees the opportunity, there's the part of you can only have so much property in a portfolio at some levels of wealth that you want to differentiate and do something a bit different. But it's just a time constant to be like, how much time can we put in to go out to the regions?
It's I think it is one of those, we don't, well, I certainly didn't learn any of this in school, and I didn't have a family that was focused on this. So I think in this day and age with the podcast and the other opportunities, some of you might know Claire Booth at Dubbo, a few of us do anyway. There's somebody will correct this statistic, but it's, trillions of dollars of value swapping hands in the next few years around, particularly from that land succession piece and what that looks like. Are there questions or comments, anything that anybody wants to ask Dan while we've got him?
Yeah, I'll jump in.
Go for
You
it.
go.
No, you go, Nat. You go.
What's your advice, Dan, if we do come across people who we think would be good to reach out to just for that advice, how we should approach that? If we're purely just looking for a casual conversation, how to make that come across genuine and not try to think that they're smoke and mirrors and you are actually wanting to ask for money?
You mean you're a founder and you're wanting to ask, like, just I think the hardest thing is people just don't get the courage to ask and to be okay with a no. Like you just like I don't think there's any secret sauce other than like doing. So if you reached out to me, it would make a lot of sense to go, hi Dan, I know you're working, like do a bit of research and you go, I know you're working with regional areas and founders and you look at this sort of business. I'd love to get your thoughts on whatever you're doing. So like a little bit of research and a little bit of personalization goes like a long way because it takes you to the top, because a lot of the contact we get is where someone picked up our name from a database, they've built a generic automated email and they go click and the same, like 400 people all get the same email with zero personalization. I have an agent that just filters that out. I don't even see those emails anymore because it can pick up AI in emails. Whereas if you sort of jumped on LinkedIn and, in this case, I sat in on the brunch with friends, I'd love to chat to you. If not you, do you know someone who makes more sense for this meeting? Because I know like a couple of other ag investors, we know the meeting. And if I can't help, I'm a very pay it forward person because I had a lot of help to get where I am. Even if it's not me, I probably know someone who might be able to help. And I think the biggest barrier is just having the courage to ask. I think I've never had that problem, no matter how stupid the question, no matter how big. I just asked, right? Like, ended up reaching like one client, one of our investments wanted to meet with some of the heads of BHP. So I just cold reached out to them, you don't know me, but here's a good idea that I think would work, and then sign them the client. So like you never. Like you just you do it right. You do the personalization. You rationalize why it makes sense for us to have a conversation. And I think it's good.
Okay. Thanks, Dan.
Now, it's a really good question, and this is where LinkedIn can also be your friend. So if you want to talk to Nikki, say you reckon she's the person, I always stalk people on LinkedIn and see who we have as a mutual connection.
Who's connected.
And let's face it, sometimes I'm like, I don't know any of the connections that are the same between Nikki and I, and I've ended up with people on LinkedIn I don't actually know, but I'll go, oh, Pip and I both know Nikki. Pip and I both know Nikki. I'm going to ring Pip and see if she can do so. You know what I mean? So use your networks to help with some of that. Because Dan's exactly right. It is that thing. You've just got to rise above the noise of everybody else who sent the same email to 4,000 other people.
I think people misunderstand it. Like, if things are asked in the right way, people generally have a lot of time to help. Like, for me, it's just like I time cap it sometimes, or if someone wants, I just want to ask you about this, I go, sweet, I'll just book like a 10-minute phone call or a 15-minute phone call rather than just making everything an hour. Because you can work out a lot in 15 minutes and then work out what the best next step is from there. In fact, it's more tailored, specific. I want to ask you about this is a good end to a longer conversation.
Really
Okay,
good.
great. Thank you.
Any other questions or comments? I'm conscious of time. I'll keep it to it, but we've got a bit of time if anybody has anything they'd like to ask.
My question is really selfish. It's when are you next coming to Gundawindi?
I got in trouble because the touch football team I sponsored out there made the finals, and I didn't like young Will got angry at me, Julia, for not making the effort to go out there. But probably pretty soon, because we just did our most recent date, and some things are happening internally. Good to come out and see some of the people out there. Plus, like, one of my friends is trying to buy some property out there, so I think he wants me to come out because, I mean, you probably know Jaco, right? Like, Jaco is selling it, so, and we know him quite well, so I think they're trying to angle for us to get out there pretty soon.
And I love you called it a cliche. If you ask for money, you'll get advice. If you ask for advice, you'll get money. I think that's really that's a great one. I hadn't heard that before, so thanks.
Yeah. And like the other one, I love the other cliche I like is like, particularly when it comes to startups, it's like you got to plan to become what you plan to become. Like you don't actually just like go from zero to like a big business off the seat of your pants. Like you have to just think about it, like constantly iterate. And that's all parts of it, like capital raising, growth, product development, all those sorts of things.
It's a whole new world, team, and the Series A and the seed and the pre-seed and the this and the that. I sat in lots of meetings with people like Dan, texting them from across the table going, what is that acronym? Everybody exactly. Somebody, I bet you did this meeting.
I hate all those terms. For me, it's like, I need money. Like, whatever you want to call the rest of it, it still comes down to how much money you need. You can call it series, whatever you want. Like, it's like, because that also like specifies that there's only like one way to raise capital in this ecosystem, which isn't true either.
Is there anything else you'd like to leave us with before we wrap up?
I think the thing I always encourage people to do is like, actually, if you're thinking about getting into this space, even as a founder or anyone just in general, like I know I used like the Sora example of creating generative AI, like it is important you start testing and trying different technologies, like whether it be in your role, whether it be in your home, like, particularly around productivity and things like that, because it's something I get blindsided by, because I'm day to day on like the coal face of technology. I forget that, like, if it's a race, like I'm here, but the general population, like my friends, are here, and it's the ones that are all the way ahead of that are going to be the ones that ride this wave through like the next 10 years. Like it's critical to get in and understand where it's going and how you can integrate in that day to day. Like, even just in the last week, we've automated so much workflow in our internal systems that I've saved like hours a day, a week, a month that I get back. And part of it's quality of life for me, because I want to spend more time with my kids. And the other side is the quality of the work is getting a lot better, and to stay relevant and to compete and then to like succeed in it, you need to be doing that, like trying things out. Not all of it will work, but for pretty much every ecosystem, every industry, there is some sort of technology you could be leveraging to make your role easier.
It is a whole new world out there. There's a few of us that are going to see each other up at Tropical Innovation Festival, which is every year at the end of June in Cairns. And so that might be the other thing that I would suggest. And obviously, I had an advantage when I was in a particular role where I got sent to all of these different conferences that were not in my world normally. But thinking about and sharing when there's opportunities on to dip our toes in this, you know, whether it's innovation, whether it's a tech conference, whether it's whatever, looking for different opportunities just to open some of this up to you all. We're from all over Australia, I'm conscious, but certainly.
Like jump on some WhatsApp groups, right? Like I have like 3 or 4 WhatsApp groups where if we find a new technology or come across something, an article or something that we think everyone's worth reading, we share it, we all try it, we all give feedback on it. That's hugely beneficial as well, because now it's not just within your like center of influence or your line of sight, you're seeing a much more 360 view of what's coming.
It would be great if people want to think about that. For those that are members of the connection table, you know, it's another great occasion to be putting some of that information. We'll get Joe to set something up, but you know, that's the idea: sharing ideas and what we've come across that can be useful.
Because it's not about trying to 10x. Sorry, one more. It's not about trying to 10x, right? Like we have improved like 0.5% at a time to get to where we are now. Like you're not going to solve anything with a silver bullet, but if you're constantly iterating, like the difference in 6 months could be huge.
Massive. Yep, absolutely. Dan, thank you so much. I'm conscious you were able to do this between flights backwards and forwards. Like I said, ended up in an interesting situation here, but that's the beauty of these catch-ups once a month, is that we can join in from anywhere. We are a group of ladies today. Ladies, thanks for joining us. We know there'll be others that will listen to the recording, but appreciate the fact that you've joined us for lunch today and for the questions and the interaction with Dan. Dan, you might just suggest what's the best way if people want to reach out if they haven't already tracked you down
my
on
email.
LinkedIn?
Yeah, or get my email off you. It's fine.
Yep. Okay, great.
Just be specific, because I have the memory of a goldfish sometimes. Like just leave me.
Okay.
I was at Brunch with friends.
Perfect.
Like, it's pretty brutal, pretty blunt. Otherwise, I'll just like pick it up probably.
Yep. No, that's really great. We appreciate we appreciate your generosity, my friend. I look forward to seeing you in a couple of weeks. So everybody else, have a great rest of your day. Sorry, Dan.
No, good. I was going to see you as well, and Liam's coming as well. So my son's coming up too for the. he'll be the little mascot at the.
I'll have to get him to give me a lesson in AI by the sound of it.
I'll have to keep upskilling him then.
Yeah. Team, good to see you all. Have a good rest of your Friday. We'll see you in a month.
Bye.
See ya.
Thanks.